Welcome back to another video, subscribers. Today, we're going to go over IBM and Intel stock. These are two technology stocks and two technology businesses that have been shattered on Friday. Okay, we can see IBM was down 10% and Intel was down about, again, 10%. And if you take into consideration 1% after hours, and investors did not like their fourth quarter results. So I'm going to be going over whether or not you should be looking into Intel or IBM, or at least putting them on your watch list. Okay, I know I certainly am, and I'm just going to say right out, I like Intel more than I like IBM. Okay, so first let's start with IBM. So we can see that they actually have a pretty nice dividend. Let's go on Yahoo Finance because it's a bit more accurate, of 4.9 for 5%, which is again pretty damn good, considering Intel is a tech company, but it's sorry, IBM is a tech company, but it's a bit more established, and we can see again that its market cap is 105 billion. So kind of a behemoth of a company, but a lot of investors are wary of the stock. Even if we're looking at the 5-year trend, we can see that it was at 124 and now it's at $118, a decrease of 5% in 5 years, which is not what investors are looking for when they're looking for long-term growth. Okay, granted, they do have a dividend right now, at least that's like around 5%. Okay, but again, it shows that IBM, maybe it's getting a bit archaic, and investors are looking towards more novel tech companies. Okay, so why did IBM drop so much? Well, first off, of course, it didn't impress Wall Street no matter what it did. So shares have fallen 25% from the 1-year high. Okay, worse than this, when not adjusting the price for divs, IBM is down about 11% over the past decade. So earnings of $2.07 a share slumped more than 50% year over year, but beat expectations of $1.79 a share. Okay, so of course this revenue disappointed Wall Street, slumping 6% year over year and missing analyst expectations. So again, the performance of IBM has not been good. Okay, overall, what I have to say about IBM is, they have been having lackluster performance in the cloud space, and although their revenue for the cloud space has jumped by 10%, I believe, year over year, it's still not as good as analysts were expecting. And with other companies getting into the cloud space, for example, Dropbox is one of them. Google, Amazon, their AWS. Amazon is also lacking behind in this. And given how big of a company it is, I think analysts are expecting them to get into the cloud space faster and to have more of a market share of the cloud space, because it's going to be like a trillion plus market share by like 2025. So they're not impressed with that. Okay. Again, we can see here 4.9%. 4.9% dividend, which is not bad. And if we're looking at the technicals here, we can see that, of course, RSI dropped to like 36, which means it's nearing oversold territory. And we can see now that it dropped below the 50-day moving average, which is $124. So right now it's 118 and 61 cents. Okay, so we can see that, of course, the MACD took a hit. Slowly going to transverse that zero mark, again a sign that there's more negative news to come. Okay, and I mean, generally, when the stock trades below the 50-day moving average, as we can see what happened here, it likes to go down a little bit more before going back up. Okay, so I would wait a little bit before deciding whether or not to buy into this stock, especially since it's just dipped below the 50-day moving average on Friday. Okay, so I would wait a little bit, see if the stock can drop further, and then potentially buy in. Okay, but I think the sentiment is a little bit more of a bearish trend, especially when you look at the MACD in consideration with that. And there might be a little bit of buying, but overall, I think there might be more selling than buying. Considering that analysts are not very happy with IBM. Okay, so let's see what some experts have to say. So Tim Seymour, he highlighted that. Well, okay, so let's just now go to Intel. Intel also dropped by 10%, and even on the year, we can see it's down by about 10.5%. All right, and this has a dividend. If we're actually going to go on Intel stock, this is a dividend of 2.33%. So not as high as IBM's, but I think that this chip making company is better poised to take advantage of the growing market than IBM does. Okay, although you have to know then when you're buying into Intel, AMD and NVIDIA, for example, are taking market share away from Intel Corp. Okay, and that's why there's quite a bit of negative sentiment towards Intel. All right, but still behemoth at 232 billion market cap. Okay, so again, let's just see what analysts have to say. So it was a record year on revenue for Intel. I know it wasn't a year where they necessarily gained ground. They lost ground to AMD, to NVIDIA. I know that. But when you consider their positioning, data center was better. And when you consider at least they gave some updates on 10 nanometer, which is their like newer chips, 4 times the supply, 7 nanometer progress. And they talk about the relationship with Taiwan Semi. And Dan Nathan is ditching IBM, noting that it is losing ground in cloud technology. You just throw all the worst trends in tech and you mash them up together and you have IBM. They made the acquisition of Red Hat and they have a CEO that people feel confident about, but I think investors would probably feel a lot more confident if he was running another company that actually was growing. I mean, just look at the cloud numbers. They're not just even that good. They're up 10% or something like that. To me, I just think this is kind of dead money. It's not for me. So again, I guess analysts on Wall Street have high expectations of IBM, and even though they had positive, solid revenue, they're not growing as much as analysts would like to grow them. Okay, um, so yeah, I definitely like Intel stock a bit more, even though it has a lower dividend. And again, let's look at Intel. So again, 230 billion market cap, and when we're looking at some technicals, so RSI at 58 means it's neither oversold nor overbought, so it's kind of just chilling at 58 there. And we can see that there was bullish sentiment up until recently, and the MACD just sort of recently dropped a little bit. So again, I would wait a little bit before buying in. And there was actually a huge, or like about a 6% run up in the stock price before it decreased by close to 10%. And the reason for that was actually the CEO came out and said, "Oh, like we actually had very, very strong revenue and we beat our own earnings expectations, so the stock ran up." But then they actually didn't deliver the fourth quarter results, but apparently a hack in their system actually made them release their fourth quarter results earlier than expected, which I guess analysts weren't or investors weren't impressed by, and then there was a huge selling off in Intel stock. Okay. And again, it's still above the 50-day moving average, as we can see here. So I would wait for Intel stock to come closer to the 50-day moving average before buying into Intel. Okay, so let's take a look. But I do believe Intel is a bit better than IBM. Just maybe wait, put it on your watch list, and if it closes near $50, then feel free to buy some stock. I might actually have to. So strong sales from its personal computer chips and its autonomous driving unit mobile helped Intel end a difficult 2020 on a high note. So they said that they saw fourth Q4 sales decline to close to 20 billion, whereas expected from 20.21 billion in the year ago period. So PC sales rose 9% to 10.9 billion, and the company said it sold a record number of notebook chips, and analysts had forecast PC sales of, again, close to 10 billion. Mobileye, which of course is a subsidiary of Intel, rose roughly 50% to 333 million, and its way to be over $1 billion annualized business, a real accomplishment. Okay, so Intel logged overall fourth quarter net income of 5.9 billion, which amounts to $1.42 per share, compared with a profit of 6.9 billion or $1.58 in the year ago quarter. And so they handily beat Intel's own sales forecast for the Q4 and topped consensus estimates, allowing outgoing CEO Bob Swan to leave the company on something of a high note. Okay, and they're also switching up management, something that I should note for Intel, to try to sort of compete with these, these faster chip making companies and these more tech advanced chip company like AMD and NVIDIA. Okay. So Intel shares rallied in the final minutes of trading on Thursday, rising 6.5% to close at $62 after Intel unexpectedly released results roughly 7 minutes before the end of the trading session. And then shares were down 4.6% in pre-market trading Friday morning. And I think this was, again, due to, of course, I don't know, I think their systems got hacked and they had to release their results, or results were released because of this hack. So again, he said that we significantly exceeded our expectations for the quarter, capping our fifth consecutive record year. Okay, again, Wall Street had expected Intel's data center chip sales to drop nearly 25% in Q4, but the company reported sales of 6.1 billion, which marks a 16% decline from the year ago period. Intel gave investors another reason to cheer, announcing that it was raising its 2021 dividend by 5%. So that's really good. Okay, so again, we can see here, if we're just looking at the 5 days. So on Thursday, it actually rallied by about, like, I think it was when we were looking at the beginning, about 6%, but then you can see this steep drop off because there was a reported hack that forced the chipmaker to release its fourth quarter earnings. Okay, and I guess investors weren't happy with that. So again, overall, I do like Intel more than I like IBM, just because it seems like Intel, with all the management switch up, they're gearing more to be better prepared to compete with companies like AMD and NVIDIA. And also they have larger units, whereas IBM seems to be more haphazard. Excuse me. Yeah, they seem to be more haphazard. They're just sort of putting together a bunch of stuff together, trying to like get into the cloud space, but not really showing any promising results. And that's why I'd rather choose Intel over IBM, and I think it will perform better in the future. Okay, and just a comparison, we look at something like Advanced Micro Devices or AMD. Over the year, they're up by 79%. Okay, whereas again, something like an Intel stock over the year, they're down by 10.5%. All right, so be careful when you're investing in companies. Of course, always do your own research. I would wait for both of these companies before I buy in, and I think Intel, definitely with this new management, is a good sign, and they will be able to compete with other chip manufacturers. But I mean, again, even over the long term, that Apple's making its own chip now. Okay, so they're not supplying chips to Apple anymore. And there's different ways that this could play out. Okay, so I might be wrong. Again, do your own research. This is just one person's opinion. But yeah, I appreciate you listening to me. Take care. Let me know what you think about Intel and IBM in the comments below. Be sure to like and subscribe if you enjoy the video. So take care, and I'll see you in the next one.